Hey guys, it's Mike Watson with Keller Williams here in Palmdale, and here is this month's real estate market report. In July, we had 494 homes sell, which is a pretty typical amount for July. Um, Good news is the average sales price was up to 314,000. That is the highest this year, and it's the highest it's been since August of 2007, which is a little over a year after the crash of the market. And then before the crash of the market, it was in June of 2005, with the highest ever average sales price being in May of 2006. So year to date, homes sold is down 2.1% over last year. That's not really a big deal. It was only 80 units less versus year over year for last year. But a really interesting number that doesn't show up here, and we'll get into it later with the inventory level building, is that our year-to-date new listings is up 10.25%, which was 500 more homes have come on the market this year than they did last year for the same time frame. And like I just said, 80 less have sold. So that's one of the huge indicators of us building inventory here in our market. The next thing I wanted to talk about was the average days on market for the homes that sold, and that number was down 14%. That is a great number. The average days for July was 37, and that number has actually kicked up slightly over the last 2 months. We got down to 33 days on market, which is super fast. And the last time, so this time last year, it was 36 and a half days. So we're just a half a day longer on the market than we were last year, but it's still a really low month. And prior to last year, I mean, it was half a day, but any real difference, it's been almost a decade since we had an average days on market lower than that, by more than half a day. So that's a really good factor, and that shows that we have a high demand. So even though we are building inventory, there is a high demand. Homes are selling quick, and one thing that I didn't cover on this slide is that our list price to sales price ratio in June, not July, but in June, was the highest it had been at 98.9% in nearly a decade as well. But in July, so this last month, it fell to 97.6%. So that's a big deal, 1.2% in a month. But that 96.5 has been the market average for as long as I've been in the industry, give or take, the seasons here. But so we're back down to normal. But prior to last month, it was one of our record years for list price to sales price ratio. And I'll come back to that when I talk about the inventory levels. So the number of homes that sold in July was 494. That was down slightly versus June. In 1 month is not a big deal. So I went back and looked at July versus July versus July, and it's not bad. So this year was 494, last year was 457, and the year before, so July of 16, was 499. So that's pretty typical, right? In June, we had 539 homes sell. So, 40 homes less, not a huge deal, but it did make a difference. A bigger number to be concerned about is the number of homes that went into escrow fell by 10.5% versus last month. And that is down slightly. So the last couple of years, that's gone down. So this year we had 499 go into escrow. Last year was 525, and the year before was 550. So that decline in the number of homes going into escrow, plus the large amount of new homes coming on the market, that is a sign of why we're building inventory. Anyway, so homes sold, we already talked about that. Year over year, but just last month it was down 12.5%. And the average sales price we've kind of talked about is up 2% from last month, but you can see on the graph down here that it's, climbed substantially from, a year. Went from what, 290,000 to 315, 20%, that's, or 20,000, that's a pretty good deal. So home values are up, our days on market are low, our list price to sales price average was high, and now we're back to average. So that's good. So why are we building inventory? You can see on these two graphs here, this background color, this lighter blue on the top graph is our month's worth of inventory. And what that is if we take the average number of homes that have sold over the last 6 months and we divide that into the number of homes that is currently for sale, it gives us our month's inventory, or what we call the absorption rate. And we're right at 3 months. You can kind of tell here that it's an obvious increase from about 2.5 to 3, and anything below 6 months is a seller's market, and we're at 3. So in theory, that is a great number. The only thing that I paid attention to that made me draw caution is that the 3-month supply is the highest we have had in 3 years. And again, it's just like steadily creeping up, nothing crazy yet, but it is going up, and it's gone up 5 months in a row. So that's no longer just a fluke, like that is a trend and a pattern. So that's something we're paying attention to. And then the other thing is the number of homes that are going into escrow and selling, and then this disparaging gap right here. Like December doesn't matter, the market slows down for the most part, right? But in January, you can see the huge kick up in new listings, and then that number has just gone up. And you can see when the pendings tapered off, then the inventory level built right here. And that's the total of number of homes for sale. And you can see the number of homes closing is kind of tapering off. It didn't have this sharp increase that the number of homes going into escrow had. And usually, like in this gap right here from January to March, you can see that the yellow line usually precedes the pattern of the blue line. But in June and July, they ran parallel to each other, or on top of each other, and that's not a great sign. So with fewer homes going into escrow in July, that is a sure indicator that fewer homes are going to close in August and September, which, if we continue to put more homes on the market at the rate we have been, our inventory level is going to continue to increase. And we're at 3 months, but it looks like we're getting ready for a shift for sure. Another thing that I took a look at that isn't displayed here is that the number of homes that have sold in the Antelope Valley below 250,000 year to date versus last year was down 38%. So that could be a big reason why we're building inventory. So with the other stats of, the list price to sales price ratio was good, our days on market was good, the number of units that sold was fine, but we're building inventory. It looks like it's affordability, and interest rates are up 0.5% year to date, and year over year they're up 0.6, which is a big deal. So every 1% increase in an interest rate reduces a buyer's purchase price amount by 10% if they wanted to keep their payment the same. So for round numbers, let's say that if a buyer was buying a house at $300,000 and they had a 4% interest rate and their payment was $2,000 and the interest rate went up to 5%, in order to keep their payment at $2,000, they would have to reduce their purchase price from $300 to $270 to keep their payment the same. As a seller, you might not think that that's a big deal, except buyers, locally here, most of them get approved and buy for their maximum amount that they qualify for. So if all they qualify for is $2,000 a month and interest rates go up, they can't continue to shop at $300,000 even if they want to. They have to reduce to $270, and now they're looking at other homes that may not meet their needs, and if they're still stuck on the $300,000 homes and not the $270, and you have a home for sale at $300,000 that you need to sell, then you're going to have to get your price down to where somebody can buy it. And so these are the early indicators of a market shifting. It's nowhere near as bad as if you go on to Google and type it in, or if you've been watching the news and there's been headlines like Southern California real estate market crashing, the nation is next. It doesn't look that bad, at least locally, but it's definitely changing. So let's just keep an eye on that. If you guys have any questions, feel free to give me a call. Now is a good time to buy because interest rates are still low and that money is cheap, even though they're higher than they have been in recent history. Historically, they're super low. And then sales prices are, they are what they are, and we're still about 11% lower than we were at the peak of the last market. And as long as somebody can afford to buy while money is cheap, I would say it's a great time. And prices are up drastically from the bottom of the market. So if you've thought about selling and it looks like the market is turning now and you want to maximize your profit, now would be an amazing time to call me and let's find out what your home is worth and see if that works for you. Anyway, guys, have a great day. And if you have any questions, feel free to reach out to me. Otherwise, I will talk to you soon. Bye.